everywhere. Adam Hewison here, president of INO.com and co-creator of MarketClub, with your video market update for Tuesday, the 19th of March. Well, the Fed's meeting today and tomorrow, and this is what we expect. We think they'll do nothing. They'll just keep everything the way it is. They are determined to try to improve the economy, and it has succeeded to a little bit, but they've spent an awful lot of money doing that. And particularly in light of what's happened in Cyprus, I don't think they're about to rock the boat and try anything different in this meeting. We'll know the minutes of the meeting will be out in about 3 weeks' time, but the reality is I think the market's going to be pretty much choppy until we get through this period. So let's go to our portfolio manager. We'll start with the Dow. Dow still very positive. We've got two green triangles for the S&P and 2 for the NASDAQ. So everything's still much in line in terms of trends are positive, and you can see this trend continuing up, and we expect this market to hit the level somewhere higher than we are right now. So I think that's one of the key things we're looking at. So we're looking at the Dow to potentially hit the 14.8 to 15,000 levels. So let's see how that plays out. But generally speaking, if we get close on this, we're going to be looking at, this is today's action. This is a weekly, of course, but you can take on a daily. We're seeing this is a third day. We've had a pullback. Third day down. We're back to an area where we may find some support, but generally speaking, we could actually come down a little further based on our Fibonacci studies, possibly even all the way back down to the 14.1, 14,550 level. And I think we'll see this market continue to just tread sideways and then eventually have another push up to the 15.8 to 15,900 levels. So let's see how that plays out. Let's go to our next market. And that's the S&P 500. Much the same here. We're looking for this market to move higher, possibly the 1590, 1600 level. So we do have another leg up. But remember, we were talking about the 1550, 1560 level to take some chips off the table. We felt that was a target zone, which we've reached already. But I still think there's another longer-term target zone that is the 1550, 1600 level. So watch that carefully. So generally speaking, let's go to NASDAQ. And NASDAQ, much the same there. Everyone's anticipating Apple having a big rally. It's the most expensive calls we've had in quite some time on Apple. And that's obviously a very large part of this market. And I think that's the thing to remember. Hold on, there it is. Here we are. So you can see the NASDAQ has actually come under a little bit of pressure. But generally speaking, it's still looking, I think, still looking good. It's still not below yesterday's low. And the trend, of course, with our trade triangles remains positive. You can see we picked up the trade triangle right here at 3,164, and it's still moving higher. So moving on to spot gold. Now, spot gold is interesting. We've been moving sideways. It's higher today, of course, but I think there's a line here that I think I want to share with you that I think is going to be a real stopper in this market. And if I draw it from, I think it's from here. Let me just get a little further. Yeah, it is. So let me get the trend line. I'm going to go to a single chart, close only. Just draw the trend line here. And it seems to me we're coming in right around the 1640, 1650. I think that's going to be a very hard level for this market to get through. So I think, yes, I do think it could go maybe another $20, $30 on the upside, maybe even $40 on the upside. But I think the other thing to look at here is the Fibonacci retracement level. So if we go from the highs here, pull this down to the lows, it gets to be 1643, which is 61.8% retracement. Takes you right back to this previous low. I think the market's going to have a very hard time getting through that. And I would probably I suspect we're going to see like a brick wall at that level. So here we are. We're still longer term negative, intermediate term still negative, short term only is positive. So we have a 55, which means it's a trading range when we are overbought. So I wouldn't get so excited about this market at the moment. Let's move on to the euro dollar. We got a lot of press yesterday with with the Cyprus and of course all the Italian problems we're having. But generally speaking, the 128, 129 level is really going to be the area it's going to find support. Certainly the 129 level has been where we've been oversold here, right here on the Williams %R indicator. I think for the time being, I would not be surprised to see this market go sideways to a little bit higher. We have a mixed bag right now. The intermediate and the short-term negative while the longer term still remains positive. Now this causes for, I like to see all these arrows, these little trade triangles in the right one direction that gives you a stronger trend. So let's see what happens, but I wouldn't be surprised to see maybe a little bit more recovery, but it looks like 130 is a resistance level, and certainly 131 is a brick wall for this market right now. Moving along to our next market, crude oil. Crude oil is under a little bit of pressure today, but it did hit the 94 level earlier on in trading. 94.09 was the high. We've come back down. So it's trying to make this high. We did see a higher high in the momentum, which is not a divergence, indicating that the line of least resistance, at least for the moment, potentially could be on the upside. Longer term, we still have a bullish market here, but the intermediate term still remains stubbornly red, and that indicates some sort of problem here for the market. So let's just take a look at our Fibonacci. We'll just do a very simple Fibonacci measurement, and we can do that really easily. Just drag from the highs, pull it down to the lows. And so 93.92 is a 50% pullback. 95 is a 61.8% pullback. So these are the levels I'd certainly be looking at to see how this market acts. But certainly it seems like we were desperately negative of everybody here, and then we suddenly come back. Let's see what happens now. I think we'll regroup, and I wouldn't be surprised to see this market go higher. So let's see how that plays out. A couple of markets that showed up on our radar screen this morning, which is BHP Billiton. The symbol is BHP, traded on the New York Stock Exchange. And you can see the stock gave a major sell signal today on the monthly charts, which is what we follow. And let me just go to, there it is. So you can see there's the signal right there. 71.43, currently trading at 70 even, and it looks as though it's broken some very major trend lines. If you go out a little bit further, you can see this market potentially has support at the 60 level. It's currently trading at 70. If it were to go through 60, I think this would look like a huge top, which would indicate you could potentially go much lower in the stock. But generally speaking, first line of call is going to be 60 on the downside. Definitely a major signal here. We can see we had one here as well, but now it's changed. As the markets change, you have to change with them. So BHP, put that in the negative column today. Another stock that showed up on our triangles today was Lululemon, excuse me, and Athletica. And this is, they make clothes, and they apparently had some problems making some pants, but they're under a lot of pressure today. That came in at 65.19. It's 62.32 last. This is very negative in my mind. If we see the market take out this low right here, which is right around the 55 level, then we could see this market really come under a lot more pressure and take it down lower. But generally speaking, you'd want to be out of this market right now if you're in Lululemon, Athletica. So now how we found these markets is quite interesting. We just went to our trade triangles, which are right up here, and you just click it there, and you see we've actually had some more show up. There's the BH Billiton, the Lululemon, and these are all showing up since we have looked at this market earlier today. Now, what also is interesting, you have Market Vectors Russia, which is an ETF, which is RSX, giving a major signal today to get out of this indices, or out of this ETF. And also you have one for the South Korean fund. Now, we do track the RSX in our global strategy portfolio, and I'll show you how that works. I'm going to go there right now. So let's just go there, and you go there by simply clicking on the MarketClub logo, and it'll take you to our navigational page. So here we have 5 different markets. We have Brazil, Russia, India, China, and Australia. Out of the 5 of them, we only have positions in 2. We have one in Australia, we're long, and we've been long since January 16th. And then we have one in Brazil, and we've been long our position is 56.65, and that is entered on March 6th. On the vectors, the Russia ETF RSX, we've been on the sidelines at 30.10, and you can see it's still a negative, so we will not be entering this market. So and we're not in the India, and we're not in China. So out of the 5 markets we track, we're in cash positions in 60% of them right now. So we only have a very small exposure to these 2 markets, Brazil and Australia. So that's part of the overall strategy that we use for MarketClub's global ETF portfolio. So anyway, I'm Adam Hewison for Market Club. Thanks for stopping by. Every success in the market today, and let's see what the Feds come up with. But generally speaking, it'll be much to do about nothing. I think we'll see these markets just trail sideways for a while and then resume their upward trend. I'll see you tomorrow, same time, same place. Thanks for stopping by.